Moving on to the massive update from eurozone, where the European Central Bank has hiked the lending rates to the highest levels in the last 22 years. The ECB raised its lending rate for the 8th consecutive time, this time by 0.25% to a 22-year high of 3.5%. The hike comes even as the eurozone continues to struggle with high inflation and a contracting economy.
Inflation has been coming down, but is projected to remain too high for too long. We are determined to ensure that inflation returns to our 2% medium-term target in a timely manner. The Governing Council, therefore, today decided to raise the 3 key ECB interest rates by 25 basis points.
Now, the hike in lending rate is not good news for the eurozone economy, which has now entered a recession. For the ECB, the clear priority is to tame inflation.
Economic growth is likely to remain weak in the short run, but strengthen in the course of the year as inflation comes down and supply disruptions continue to ease.
Eurozone inflation has been moderating for months due to lower energy prices and the steep increase in lending rates, but remains unacceptably high for the ECB at 6.1%. Now, the ECB's latest hike comes a day after the first pause in US rate rises in over a year. That was a signal that the current monetary tightening cycle is nearing an end, even if a little more US tightening is still possible. Now, to talk more about this, we're joined by Andrew Holland, CEO of Avendus Capital Public Markets Alternate Strategies. He's joining us live from Mumbai. Thank you so much for joining us on the broadcast, sir.
My pleasure. Thank you for the opportunity.
Sir, the Fed has paused its rate hikes, but the ECB has hiked rates. How are market pricing these developments?
I don't think the pricing of these developments at all. I think the markets are still working on that Goldilocks scenario, particularly for the US, that growth is obviously still there. I mean, it's not coming down to the kind of levels the Federal Reserve were anticipating of 0.4% GDP growth. In fact, you're probably hearing of upgrades to that to nearer to 1%. So the fight is still on to bring the economy down, to bring inflation down, and that means that we probably have to listen to the fact that he's talking about maybe 2 more hikes before the end of the year, whereas the market was expecting some rate reductions by the end of the year. So I think if that plays out and the data could support that, then the markets will probably have some correction to come. And the fact is that the US markets have been led by a very narrow number of stocks, which has really helped bolster the indices, and that's just going to help feed through to the rest of the world in terms of the market performance over the past few months. So I think what happened over the last month and a half is that we all expected the Fed to go on pause, which they did, and then whilst it would be a hawkish statement, we would be looking at the figures from the data to indicating that the Fed would slow down and reduce rates by the end of the year. Now that's changing. So maybe the market's played that already, and now it's looking very overboard. So I wouldn't be surprised if the next leg for global markets is probably down rather than up. You still have that momentum right at the moment, but it wouldn't take much for the markets to come up.
Right, sir. So do you think emerging markets are becoming more attractive for foreign investors now?
Yeah, I know we've been very bullish on the fact that emerging markets would be the beneficiary of any kind of global recession that's going to happen, and that's where the growth will be. The good news is that with the oil prices where they are, commodity prices falling, other commodity prices falling as well, that the rest of Asia can actually reduce rates a lot quicker. And we saw that in China the other day, and we expect more stimulus from China. The bad news for India is that, the RBI has kind of followed the path of the Fed to some extent. So if it is an extended kind of pause with a possibility of higher rates, then the kind of momentum for our markets and the banking sector in particular will probably slow because, the RBI, we were hoping would be able to reduce rates in October of this year by 25 basis points. That might get delayed, which would put pressure on our markets because the valuations are relatively high compared to everywhere else.
All right, sir. Now, just for more clarity on that, from these levels, which markets do you think will outperform?
So I think if you're looking at Asia, and kind of relatively to where India is, if you're going for a slowdown and then the rebound, from 24 onwards in the global economy, then it's going to be the exporting countries. It's going to be the Chinas, the Koreas, the Taiwans. And if you look at Korea and Taiwan, so far this year, both markets, well, Korea's up about 17% and Taiwan's over 20%. So that's telling you where the incremental FII money is going and where the excitement is. And their valuation is obviously a lot lower than ours.
Right. Mr. Andrew Holland, thank you so much for joining us on this broadcast with your insights on this.
Pleasure.
WION is now available in your country. Download the app now. Get all the news on the move.